From the virtual newsroom of Impact Alpha, this is your Impact Briefing for Friday, August 13th. I'm Monique Aiken. Today I'm joined by Donnel Baird, CEO of BlocPower, to talk about the $1 trillion infrastructure bill passed by the U.S. Senate this week and the latest dire warnings on climate. Hi, Donnel.
Good to see you as always. I'm glad to be with you.
And we'll hear from Lori Chapman, head of Enterprise's Community Loan Fund, and my guest on the Reconstruction podcast this week. We talked about Enterprise's equitable path forward.
We challenged ourselves. I said to my team, I said, look, let's go back and look at our underwriting, quite frankly, our risk models and what we consider folks need to have as a minimum to be able to access our capital sources.
But first, here's what you need to know from the week in impact investing. The big takeaway from the Intergovernmental Panel on Climate Change's blockbuster report: time has just about run out. Scientists say the 1.5 degrees Celsius threshold is likely to be breached within 2 decades. Sea level rise of 2 meters by 2100 is possible. Bottom line, worst-case scenarios are becoming increasingly plausible. The UN Secretary General says it's, quote, a code red for humanity. Investments designed and measured for positive impact reached $636 billion last year, up from $505 billion in 2019, reports the International Finance Corporation. But the top-line numbers concealed a steep drop in both the numbers of new funds and new capital raised during the COVID-19 pandemic. TPG Growth's Rise Fund backed Human Interest's $200 million round. Employee benefits, like health insurance and retirement plans, are often too expensive for small and mid-sized businesses. San Francisco-based Human Interest has a no-fee 401k retirement plan for small businesses. A growing number of communities are creating investment funds to shift power and build local wealth by giving an initial boost to local businesses that are not yet bankable. In North St. Louis, WePower is closing its $1.5 million target after $500,000 committed from Living Cities. Changing the nation's 80-year-old securities laws would accelerate the efforts. Twiga Foods is helping Kenya's informal retailers stock their shelves and reduce prices. Impact Alpha contributor John Girani in Nairobi profiled the company, which runs tech-enabled warehouses and shuttles food products from farmers to retailers. And Greta Thunberg graced the cover of Vogue Scandinavia in an oversized trench coat made from upcycled materials. The teen activist called out the human and climate impacts of fast fashion. Impact Alpha subscribers got all of these stories and more in their email each day this week. So glad to see you again, Donnel. So glad you could break away from Google's Climate Tech Accelerator, and congratulations on your graduation from the program.
We are in the bottom quartile of the cohort. We almost failed out of a free accelerator program, but we made it. We're going to graduate. I'm thrilled.
Well, we're happy to hear that. And other things that you've been working on, I know that you're also tracking the infrastructure bill that passed in the U.S. Senate this week and the even bigger reconciliation package that's making its way through the process. How big a deal are these investments in U.S. climate action?
Well, they're the biggest investments in history. Literally, dollar for dollar, they're the largest climate investments that have ever been made by the federal government or by any government. And I understand critiques that folks have that, it doesn't match the scale of the climate crisis that we're in. Or that we're heading into as it continues to compound in immediacy in terms of danger. But it's still the largest investment that's ever been made in climate. And so that's something to celebrate. I think as I feel like a veteran of the last stimulus in 2009, 2010, we have to make sure that we make smart use of this money, that we're efficient, that we're smart, that we make tough decisions and leverage the money to maximize greenhouse gas reduction.
Absolutely. And what kind of opportunities does this open up for other climate entrepreneurs and perhaps others in your cohort, as well as investors? What might be the impact on BlocPower itself?
Yeah, we have spent the area that BlocPower is focused on first and foremost has been actually community broadband. As soon as the pandemic started, we knew as a public benefit corporation, as a social enterprise, that We were going to have to respond to the crisis, and clean energy is important and it's critical and it's essential, but it was not top of mind in many communities of color, in many low income and working class white communities. Obviously, the pandemic was, and the unfortunate job losses. And then, of course, the digital divide, the fact that, you know, many more students than I think we realize um, did not have internet access, which means that they don't have access to the modern economy or the modern educational system. And particularly in a pandemic, we're just alienated and disconnected. And so we decided to build out a business line. We had a conversation with our lead investor, Mitch Kapor at Kapor Capital, and Mitch said, look, Donnel, you got to respond to this crisis. Yes, you got to continue to invest in clean energy projects, but you need to respond to this crisis. And our response that Mitch and I came up with was community-owned Wi-Fi. And so we've been working with the White House and their staff there to take a look at how this infrastructure bill on a bipartisan basis could fund community-owned internet infrastructure, broadband access in low and moderate income communities that they literally own. So not just equity in the terms of like social justice, but equity in terms of like literal ownership of stock in a special purpose entity that owns a set of infrastructure assets. In this case, those assets are broadband connectivity assets that'll close the digital divide. So we want our low income families to own stock in these companies, or these local infrastructure project corporations, so that as we're closing the digital divide, we're also building wealth in low and moderate income communities across America. And so we fought really hard to make sure those policies were included in the bipartisan infrastructure bill, and they are. So that's fantastic. And it's a really great high impact opportunity to close the digital divide, bring workers and families and students into the modern digital economy while building up wealth and creating short-term and medium-term internet installation and internet network maintenance jobs across low-income communities. And so we're working on that with Kapor Capital and Goldman Sachs in various cities across the country.
It sounds like a really elegant solution to a complicated problem. And we really appreciate the work that you're doing generally to just, highlight some of the other multiple compounding crises that go beyond just the climate angle, though this week's IPCC report suggests that we have to move much, much faster on the climate side as well. And what was your take on that specifically? And are there any reasons to be hopeful, or are we doomed?
IPCC says we're kind of doomed, right? I mean, it was pretty bad. The coping mechanism that I use is, I work on trying to bring forward solutions to the climate crisis at scale. And that's what I do 24/7. I wake up at, 2, 3 a.m. in the middle of the night, sending emails, trying to move our agenda forward at BlocPower, which is to reduce greenhouse gases across the country by 20% overall. Buildings contribute 30% of emissions to the U.S. economy. We have existing technology. We have financial partners. It's just a question of willpower and operational capacity, and whether or not I'll get over my hatred of venture capital fundraising to raise enough capital to reduce greenhouse gases in buildings across America. And when you're in the day-to-day of managing personnel or projects or dealing with issues and challenges or RFPs and contracts, it's easy to lose sight of like the bigger picture, because you're using your work, or I am using my work, as a coping mechanism to like avoid the reality of the imminent disaster that seems to be waiting for all of us. The silver lining is that there is an outside chance to avoid the worst impacts of the climate crisis if we make some like rapid changes. And I think we can make some of those changes. I think that the infrastructure bill gives us a decent start. I think that the potential, democratic reconciliation climate and social infrastructure bill that's being negotiated now is a pretty good down payment. And I think if we use that capital in a smart way and in an efficient way, that we have an outside shot at avoiding the most disastrous impacts of climate change. And so I think that as I look around, leaders are stepping up all over the place, and hopefully we can all come together and do smart, innovative, creative, scalable solutions to respond to the crisis. And hopefully for folks who haven't been working on the crisis, the report's a little bit of a wake-up call, particularly in the context of, the American West burning, the smoke floating all the way across the country and causing, purple, orange sunsets in New York City where I live. Things are getting pretty bad, and I think more and more people are alarmed about that. And we need to translate all of that into policy action. But more important than policy at this point, we need to be able to implement solutions at scale. And so that's what BlocPower is trying to do. And so part of it is sticking our heads up to look around like a gopher coming out of a hole and seeing how bad things are getting, but then going back to digging our tunnel and trying to make sure that we can reduce greenhouse gases in the building sector, and then folks who are working on EV and EV charging stations in the transportation sector or agricultural sector, that those folks can scale successfully as well. I would ask you, Monique, like, how do you see the impact investment community responding to the IPCC report? And what are you guys seeing?
Well, I think that we're still waiting to hear from a lot of voices in some ways. And this is partly why, we're coming to folks like you who are experts in this sector where climate justice meets infrastructure justice, because there's a unique moment in time, as you described. We have the first urgency of now, and will we get it right? And, we wonder, we haven't moved fast enough yet. And how can we accelerate? Really, that's the challenge here. And you also mentioned something about the funding struggles and not, you want to be an operator and do the thing that is going to make the change faster. Yet you must spend some time, finding the investors and the challenges that brings. And this week we talked to Lori Chapman of the Enterprise Community Loan Fund for the Reconstruction Podcast. They're trying to solve a problem: the shortage of equity and project finance for community-based real estate developers.
So what you'd often find is that communities and developers in that community have spent years, for example, working with state, local government, and other parties with a vision for that community. Ultimately, they get to a point where all the boxes are checked, they get sign off, and they get, for example, master developer rights. But then they come to get financing, and what shows up is, well, wait a second, right? You don't have enough liquidity, or you don't have enough of a balance sheet. So in order to get this deal done, you need to go partner, right, with this other firm that's larger, that's bigger, that supposedly has, again, the ability to stand behind the risk. But there's a cost for that, right? And so the extractive nature of our forcing that partnership continues to kind of perpetuate the inability of these developer partners, be they again for profit or nonprofit, to really realize the benefit of the 10 years, or whatever it's taken them to get to that point. And then suddenly all of the, again, for lack of a better word, profits associated with that I know for these developers are going to reinvest in that community in a real way, they leave. They leave because you've had to pay handsomely for the balance sheet of, the JV partner that we forced you to enter in with.
Well, I when we started BlocPower, we were speaking with the Enterprise Foundation about partnering with us because we are a tech-enabled clean energy developer. But we are a developer, and we do focus in low-income communities in many of the communities that Enterprise focuses on. And so we've been talking to Enterprise since 2014. We've never been able to complete a transaction with them over that time frame. we were able to raise $50 million from Goldman Sachs. And so from our perspective, in some ways, it's like easier to raise $50 million from Goldman Sachs in the private sector than it's been for us to raise capital from the Enterprise Foundation. So I do think that the internal assessment that they're doing to investigate their own practices is very necessary. It's 2021.
And not just them. I think this is a challenge to the sector in general. We need to supercharge and scale up what's been working, like you and BlocPower and the work that you've been doing has been successful in expanding to other verticals. And who else is out here? I think the report was hopefully a ringing of the bell for some folks, because we need to do things differently if we're going to keep the global temperatures from rising by less than 1.5. And it's not a guarantee. Is there any other call to action you might issue for the impact world?
Gosh, you're like baiting me, and I'm going to say something crazy, and you're going to have to cut it out of the podcast. I mean, I started out as a social entrepreneur, coming out of Columbia Business School, where I was in the social entrepreneurship program. I took impact investment classes, and back in 2012, 2013, all of us had really high hopes for impact investing. And again, as we're looking back in 2021, I'm not quite sure that impact investing has had as much impact as we all would like. I think that the infrastructure bill, record economic inequality, the reckoning with racial injustice and gender inequality across the country, there certainly are opportunities for impact investing to step up and participate in building a better world. And I do believe that impact investors want to build a better world. I could only speculate as to what's preventing them from actually doing that. And I am on the other side of the table as an entrepreneur. I do think that the model of impact investment that Kapor Capital, that Mitch and Frida Kapor Klein and Brian and Ulili have pioneered, they've made hundreds of millions of dollars as venture capitalists. They've been extremely successful financially, but also they've identified diverse teams led by women, led by people of color, that have overperformed and outperformed everybody else and created a ton of impact. And so what they're doing is working. And as a millennial, what gives me hope is not that like a 40-year-old organization wakes up in 2021 and figures out that it's kind of racist in terms of its own lending after decades and decades of investing in billions of dollars of projects in communities of color. What gives me hope is that millennials as a new generation, that as we experiment with new kinds of capitalism, new kinds of companies, new kinds of investment structures, that we can generate some solutions quickly. They're going to have a high impact because it's new ideas and new energy that's needed to scale up and solve many of these problems. I think practically, impact investing, in my view, has never really shifted out of like a private equity, New York, East Coast, transactional based mindset into more of the risk tolerant, long term, patient ecosystem of investment that is kind of the best practice in Silicon Valley and on the West Coast. And so tactically, would love to see more impact investors studying the successful venture capital and early stage investment models from Silicon Valley and from Echoing Green, who in my book are still the leading impact investors in the world. And so I just hope that with this wake-up call of the IPCC report and all of the impact that we all are aware needs to be created immediately in order to like preserve life chances for our children and our grandchildren, that impact investors will get serious about figuring out what's working and continue to professionalize impact investment practices with best practices. How was that?
You said it all.
That wasn't too controversial.
It was good. New ideas, new innovations, scale what's working, follow the models that have done it right. It's fantastic advice. And I pray that everyone who's listening heeds it.
Let's hope so. We do need impact investors, people of goodwill, to collaborate and really find a way to act on their intentions, which I believe are real, to build a better world. And I think entrepreneurs do want to help impact investors do that. And I hope that there can be an immediate and collaborative conversation about how we can really conspire and collaborate together to do things differently. Because I think that's what both sides want.
I agree. Couldn't agree more. It's time to rethink it all and do things differently if we want different outcomes. Well, that brings us to the end. Thank you for joining us today, Donnel. It has been a pleasure to have you on today, and I can't wait to have you back.
Yeah, anytime. I'm always happy to connect with you all.
That's going to do it for your Impact Briefing this week. More all day at impactalpha.com. Thank you, Donnel, and thanks to our producer, Isaac Silk. Subscribe to get full access to the site and the daily brief. Right now, we're offering podcast listeners $100 off their first subscription. Go to impactalpha.com/subscribe and use the code briefing100. Thank you for listening. I'm Monique Aiken, Managing Director for TIP, the Investment Integration Project. Make sure to check back for next week's briefing, and until then, take good care.